Since the beginning of October, crude oil price has lost over $10. We see the 50-day moving average dropping lower below the 200-day moving average. So let's discuss if the weakness in crude oil continues. Welcome to My Finance Teacher, and while the weakness in crude oil has been going on since early October, this whole crude oil cycle has been going on for 87 days. And while usually these cycles last for under half a year, 159 days on average, since mid-2017, a couple of cycles at the end of last year and at the first half of this year were quite long, so we might actually expect a couple of short cycles to even out that average duration back down to 159, 160 days. So perhaps over the next 2 to 3 to 4 weeks we might actually see crude oil dropping down a little bit more significantly into a recognizable crude oil cycle low. Perhaps a scenario like this is one of the most likely ones. A bit of a bounce, maybe a fake breakout above this descending triangle, creating a bit of a bull trap. Usually descending triangles do break on the downside. So following a short-term bounce while Bollinger Bands are narrowing, narrow Bollinger Bands often precede a strong move in price. Perhaps price might actually move strongly down into that upcoming cycle low, which will be a nice buying opportunity before the rally into a new cycle takes place. Let's have a quick look at market sentiment. This is Crude Oil Optimism Index. Even these sort of half a year long crude oil cycles go through longer term gyrations with good times, as in say 2021, the beginning of 2022, when the market sentiment into the cycle lows drops only down just below the level of 50, and hard times, as in say late 2020, first half of 2023, where cycle lows are accompanied by optimism index, market sentiment, dropping all the way down to this dotted green line around the level of 30. Currently, we clearly aren't in good times. The previous cycle low was accompanied by this optimism index dropping all the way down to 35. And while crude oil has been weak since early October, this optimism index hasn't really dropped that much below the level of 40. Which I actually would expect it to do, perhaps over the next several weeks, giving you that much safer entry option, knowing that while most of the market is piling down on one side, a contrarian view might actually be profitable. Next, let's have a look at long-term seasonality. This is 20-30 year seasonality. We see that seasonality usually dips into sort of early to mid-December, which doesn't really disagree with our expectation of a cycle low in the next several weeks, followed by a bit of a bounce into a new cycle rally. A different view of seasonality suggests that November is usually very red for crude oil price, but again, this is 20-30 year seasonality. In 2024 though, this common seasonal low might easily move somewhere into early to mid-December. And continuing talking about seasonality, what I do like to look at is seasonality since that beginning of a bull market in commodities somewhere around the end of 2015. So seasonality since 2015, let me look at the summary here at the lower part of the screen. We see that November is usually the weakest month since 2015 with a negative 2.47% average decline. That's second biggest drop after March with 2.85%, but remember March drop during the pandemic low. That's a negative 45% drop, the largest drop you see on this table, perhaps a bit of an outlier. So except for that outlier, crude oil usually experiences the strongest declines during November. December, January and February though are positive months with say an average of around 2% gains since 2015. So broadly speaking, seasonality also doesn't disagree with us, expecting some gains if not into December but into January and February, after a more recognizable cycle low, which will possibly bring this 14-day RSI closer to the level of 30. Hence, for now, patience is still advised. Have a nice weekend. Bye bye.